We have Indranil, the chief economist at Yes Bank, and Abheek Barua, the chief economist at HDFC Bank, on what they've made of the comments made by Prime Minister Modi with respect to India's macro environment. Gentlemen, afternoon to both of you, and thank you for stopping by and taking the time out on CNBC TV18. Abheek, I want to start with you. The Prime Minister spoke on several aspects at the G20. From an economic perspective, do you see any kind of benefits in terms of either new trade opportunities, more foreign investments, perhaps the ease of doing business overseas?
Absolutely. I think while the G20 is a collective forum addressing global issues and trying to bring about a conciliation between the interests of the global north and the global south, there are a lot of things that happen on the sidelines, and you must remember the fact that I think for the first time in these G20 forums, we're also having bilateral meetings with the US and Saudi Arabia. So I think, and you've also had forums like the B20 that has been a part of the broader G20 umbrella, and that has sort of preceded the G20. So I think in both the sort of the bilateral conversations that happen at the very top level, as well as what has happened in the B20, there are a lot of economic payoffs and benefits in terms of access to markets, in terms of the ease of doing business in other countries and so forth. So I remain optimistic about what this will ultimately sort of result in within a reasonably short span of time.
Right. Thanks a lot, gentlemen, for joining in. Indranil, let me come across to you first on the fiscal responsibility. The Prime Minister did specify that he has an opposition to freebies. Do you think the government will stay on course or stay the course on fiscal prudence, especially in a year where there are so many elections lined up?
Yeah, I think absolutely. I think to a certain extent, if you look at the macro conditions that we are in, there is very little chance of a fiscal dole-out even ahead of the elections, and especially in terms of the also the state elections that you mentioned. So fiscal responsibility remains very important, given the fact also that because of the COVID and the type of expenditures that we had to incur, the debt to GDP ratio, the public debt to GDP ratio is around 82 to 84%, and it might be very difficult to get it down unless we have a very solid growth. Now, what Abheek also mentioned is relevant in the sense that, first of all, we need not look at the G20 presidency as only a short-term influence on economic growth, but it is more likely to lead to a confluence of positivities for the Indian economy that might actually provide or propel the growth on the higher side and in a more sustainable sort of fashion, which is absolutely necessary if we have to generate adequate amount of income within the economy to bring down the debt GDP ratio over the next 3 to 5 year period. So yes, in one word, fiscal responsibility is important. It is important also to prevent any upward spiral in interest rates, given the fact that I do not personally see much of a chance for the Reserve Bank of India to bring rates down, the repo rates down in a hurry, at least in this financial year. And a stable atmosphere in terms of interest rate structure is also important to provide the fillip to the private investments that we are sort of looking ahead to.
Okay. Abheek, I'm just going to take that point forward with regards to what Mr. Pan said about private investments and the word investment as a whole. Given the election year, do you expect increased spend in infrastructure as well as other areas? And what would the subsequent impact be on GDP then? Abheek.
Well, I think the infrastructure map at the central level is pretty well sort of laid out. And I think it's just a question of, and the sort of the allocations, etc., the financial planning has already been done. It is a question of implementing these projects. And I think from whatever we sort of get as information from the ground, things seem to be progressing well. One of the things that has happened this year, which is again very encouraging, is the fact that states have started spending on infrastructure. Yes, I don't see any sort of election-related, new infrastructure spending. But whatever is there on the anvil to be implemented properly, because it has sort of a whole bunch of multiplier effects. But on the question that sort of Indranil kind of dwelt on briefly about freebies, etc., I think the central government is is fundamentally very hawkish on the fiscal side, and it's going to sort of be very, very responsible fiscally. That being said, I think we shouldn't forget the fact that you have a lot of state elections coming up. And if you see some of the new programs or higher allocations to some of the welfare programs with a clear eye on elections, I mean, that's a different ball game. And that, in some cases, it should lead to sort of immediate rise in incomes for consumers in these states. But it sort of raises questions of sustainability for some of the states which are sort of teetering on the brink of the fiscal precipice, but which might want to sort of spend a lot more to get the favorable results in the election. So that, I think, that is a bit of a worry. But on the whole, I can say that there'll be a lot of spending which is going to be done in the next few months leading up to the general elections, and possibly after that, because some state elections are pending.
Okay. Indranil, would you agree with this view that in the run-up to the general elections, there will be quite a bit of a pickup, at least a chatter on infrastructure spending will go up, and in the elections as well, perhaps in the run-up to that, there could be a lot more announcements? Because, after very long, we are seeing a pickup in the capex cycle now. Even from a stock market perspective, I mean, stocks like L&T, for example, are starting to run after a 5-year or a decade lull. How are you feeling about this as we head into the elections?
Broadly, if I were to give my understanding, I do not think there is much of a scope for any additional spending over and above what has been budgeted. Now, what we also see, and probably Abheek also alluded to, that the states also have started their spending. And to a certain extent, given the fact that during or at least in the fourth quarter of the current financial year, but there could be election-related issues which will prevent spending in a very significant way. A lot of spending also has been sort of pulled ahead into the Q1 and should continue to go through in Q2 and Q3. That is definitely my sort of understanding of the fiscal and the way the infrastructure spends will be happening in the current year. But on an overall picture, I do not think there is much avenue for the overspending on the infrastructure in the budget. If I look at the first 4 months of the tax collection metric, I think there are certain sort of question marks and negativities that are forming, even with respect to the GST, where the per month run rate is to a certain extent a shade lower than what had been anticipated in the budget. The Q1 nominal GDP growth has been only at 8%, and that to a certain extent could also remain a negative for tax collections going ahead. And let's not forget, with oil at 90, we have to look ahead to see whether the government reacts further in terms of fiscal measures to ease the pressure on the domestic consumers, because to a certain extent, yes, they are holding the prices, or whether as an election measure, they will probably be willing to reduce the excise again on petrol and diesel remains a big question.
It'll be interesting to see how that comes about, because both the Prime Minister and recently the RBI Governor also have reiterated their commitment to bringing down inflation. Thanks a lot, Indranil and Abheek, for joining in and giving us your expert opinion on the way for the economy going ahead, and on the commentary made by the Prime Minister to Money Control. With that, we'll take a short break, come back, focus